right, guys, welcome back to We Talk Money. What a past week we've had in crypto, and oh my God, so much to talk about. Where do we even begin? I mean, obviously this show is going to be dedicated to the FTX drama and the fallout from that. We can talk about, I guess what's happened. We can recap that. By now, I think a lot of people know, but for anybody that doesn't know, let's do a little recap. I want to focus on what this means for crypto going forward. I really haven't been too vocal about this the past several days, or really since the shit hit the fan. And I've been just kind of really thinking deeply about what this means for the future of crypto. And I do have some pretty interesting opinions and predictions. But yeah, guys, what do you make of this whole debacle?
First of all, it's unfortunate. I mean, we know a lot of people that have been caught up in this FTX drama, and it's cost them a significant portion of their wealth in some cases. Chris, you've been beating the drum about exchange diversification and keeping crypto across multiple exchanges for this exact reason, because of what you've seen, previously in the crypto market. You've also been beating the drum about pulling coins off and keeping them in cold storage. So it's unfortunate, though, because we know people personally that even though they know all of these things, some people just still don't do it. Or maybe they were caught up in moving some money to do some trades and the money got, lost. So first of all, it's very unfortunate, and I personally want to be, empathetic to people that got caught up in this mess. But at the same time, every asset class has to go through, I guess, their crisis, right? Real estate's gone through it, the financial banking system that's gone through it, and it's like crypto has been this new terrain, this new emerging asset class. So I guess we're just kind of having to deal with the side effects of that.
My frustration is that, we've been dealing with this exchange bullshit for basically a decade now, and it doesn't seem to be getting better. If anything, the implosions seem to be getting bigger and more scandalous. And, back in like the Mt. Gox days, the general public didn't give a shit, right? The only people that lost money in Mt. Gox were basically like crypto cypherpunks and like really early adopters. And I did a video back in 2014 basically warning people of the risks of exchanges and how I thought Mt. Gox was insolvent before they imploded. And you even had guys like Andreas Antonopoulos, who's done amazing things for the space, but even he was blind to it, and he was beating the drum of, no, they're solvent, guys, we can trust them. But you would think a decade into this, and with the dollar amounts of these exchanges control getting bigger and bigger, that there would just be more accountability. But it seems to be going the opposite fucking direction for some way, and it keeps getting worse, and the systemic risk just keeps building, and the implosions are just bigger and bigger. And I think this one is actually different because it affected people at all levels of society. We're talking teachers, pension plans. We're talking like even Tom Brady had, I don't know what percentage of his wealth, but I think he had tens or hundreds of millions of dollars tied up. And like, this is a multi-billion-dollar loss that is going to send ripples and shockwaves through not just all levels of the US, but globally. So this is bad, guys. This is a really bad one.
It feels like the wool was pulled over everyone's eyes, basically. Like, everybody got fooled here.
I mean, Kevin O'Leary, we can pull up all these like clips of people saying Kevin was like, oh, if I'm going to trust my money somewhere, it's going to be FTX. And, and now there's all this shady stuff, a lot of conspiracy theories, and maybe some of it's true of just the connections with, Sam and his dad and, Gary Gensler, and like people are making all these connections. But at the end of the day, like this is just a really, really bad look for crypto. And I think it's going to have some effects going forward. Trav, what about you, man? I know you've been kind of hanging out in Hawaii, living the island life. Have you been dialed into this? What's your opinion? Any thoughts?
Hey man, I'm just laying low out here trying to enjoy the sunshine. No, of course I've been following it. Yeah, I was as shocked as everyone, obviously. I mean, you look at some of the institutional investor names involved, blue chips, tops of the top when it comes to VCs, right? Sequoia, IVP, NEA, BlackRock, Temasek, Ontario Pension, Tiger Global, Ribbit Capital. I mean, these are household blue chip names as far as institutional investors are concerned. And it basically looks like they did very little due diligence or, maybe even no due diligence at all in some cases. So it's certainly egg on their face. What's interesting about this is that, after a decade and a half of the crypto ecosystem having time to develop, and particularly centralized exchanges are one of those pieces that have been around since almost the very beginning, the exchanges have really not learned their lesson as far as utilizing customer funds to plug holes in their balance sheet. And I think we will finally see some real legislation here as a result, probably not just in the US, but in other countries as well. And there's obviously, like you said, going to be a loss of trust from not only the individual side, but certainly the institutional side as well for a while. So that will have ripple effects. There will be some winners here. I think Nikki and I were talking about Coinbase, perhaps something like Kraken as well. Hopefully we we don't see them go down. Now, Coinbase has audited public financials. They're a public company, so there's probably less room for games there. Kraken, still private, TBD, right? We think we can trust them, but we don't actually fully know. Overall, I think this could actually be an interesting step towards more decentralization, and protocols like Uniswap and some of these decentralized exchanges could actually pick up some incremental market share, which would be an interesting result of a lot of this. And I think maybe a positive for crypto long-term, but short term, there's a lot of negatives and you have a lot of trust and a lot of capital lost. And it just looks, it looks like a disaster that could have easily been avoided with just some very basic protocols in place. And I wish more people had called out the red flags that a lot of people saw early on with FTX, so that we could have avoided, $10 billion, $15 billion capital loss or whatever it is. But we are where we are, and everybody's just gonna have to move forward. And it's going to be a really complicated, long process in bankruptcy as well. So it's not going away. I just hope that the ecosystem isn't like permanently damaged.
Yeah, I agree. I think, if there's one lesson to take away from this for the average person that is newer to crypto, is that Bitcoin is Bitcoin and everything else comes with either counterparty risk or higher level venture risk, right? Like Ethereum, all these networks, all these altcoins, like they are not Bitcoin. Bitcoin is in a class of its own. And I was doing a tweet storm the other day about this where I said, Bitcoin is so far the only thing that's never let me down in crypto, right? ICO, rug pulls, things that claim to be decentralized that really aren't, centralized exchanges, and I think the problem is that Bitcoin gets lumped in with crypto, and exchange hacks, rug pulls, all these problems. It's almost like it puts a scarlet letter on Bitcoin. But I just want people to realize that Bitcoin is Bitcoin, and generally everything else comes with counterparty risk. And that's where you see the scams, the outright fraud, just the incompetence, right? And the theft. So I just want people to be able to really differentiate Bitcoin from really everything else. I think that's an important point. Among the other lessons, like obviously exchange diversification. Don't keep all of your trades on one exchange. And exchanges are a necessary evil. If you want to trade, you have to use an exchange. And yeah, we have DEXs, decentralized exchanges, and things like that are evolving and becoming better. They're not perfect today. But like you said, Trav, I think this is going to be a push for people to say, hey, how do we eliminate or significantly reduce the counterparty risk of exchanges? And also just the age-old thing that everybody beats the drum of, but a lot of people are just too lazy to fucking do, which is not your keys, not your coins. If you trust an exchange, or if you have a place that shows you a digital representation of your Bitcoin, but you don't control the private keys, those are not your coins and you could lose them. And I'm just tired of hearing excuses of people why they don't take that extra step to get a hardware wallet. This far into the crypto game, it's unacceptable.
I think for most people, It's intimidating. Sorry, Trav. For most people, it's an intimidating process. Like they buy Bitcoin, they're new to the game, and yeah, but the rest of it is like, oh my gosh, overwhelming for a lot of people. So I think that's part of the problem. Trav, go ahead.
Yeah, no, I think I was just going to give kudos to Chris for, for being on point on this topic for years now, literally years. And the fact that you've preached this for so long and it now like hits home once again, just shows how right you've been. It's funny because you think about the equivalent on the stock side. You think about brokers like Fidelity, Charles Schwab, E-Trade, whoever else, Interactive Brokers. I mean, a lot of these brokers that we have on the stock side, we're comfortable keeping our capital there. And even when we sell stocks, we'll keep cash there because, a lot of them are publicly traded, or a lot of them have been around for decades. And, they have certain procedures in place not to utilize customer funds. So they segregate customer funds from their own corporate balance sheet. None of that really exists in crypto. Again, maybe Coinbase is doing it. Maybe Kraken's doing it. Not fully sure, but it's a totally different ballgame in crypto still. And until it evolves to something that looks more like, the stock brokerage side, not your keys, not your coins is going to be the phrase everybody's got to continue to like drive into their head. And so, taking the extra step is obviously super, super important still.
The way that I understood, this is Coinbase is actually voluntarily, even though they don't have a lot of regulatory guidance in certain parts of the business, they're voluntarily trying to do the right thing and have those audits and just be backed 1-to-1, and they're trying to do all of that voluntarily because they can't seem to get clear full guidance from the SEC on some stuff. So I listened to an interview with Brian Armstrong, and that's kind of how he framed it. And I was going to ask you guys, because initially when I first heard of all of this going down, my initial thought was this is long-term bullish for Bitcoin. So I was going to ask you guys what you thought about that. And Chris, I didn't mean to interrupt. If you want to go ahead with what
No, you're fine.
Saying.
Yeah, I mean, look, I think to your point about Coinbase trying to do the right thing, like, sure, yeah, I'm sure, right now Binance and Coinbase kind of look like the good guys, Kraken too, I guess. But at the end of the day, I don't trust any of these centralized companies. It could be negligence, it could be theft, it could be a technical glitch that causes problems. It could be a myriad of things that are either in or outside of their control. And I'm not going to try to pick winners in the exchange space. I'm just going to say they're a necessary evil, and I don't trust any of them, right? Like, you have to have, in crypto especially, you have to have adversarial thinking. Just assume that everybody's trying to take your money all the time, because they are. In the markets, hackers, like, people want your shit.
I think that's been proven by now that everybody's trying to take your money.
Yeah. So go into the crypto markets adversarially, like, think, okay, I got to protect this stuff. You have to first learn to survive and then thrive. And if you can't get the basics right of controlling your private keys, then get the fuck out of the space. Like, I'm so frustrated because, again, we've been beating this drum for years and years and years. And it's like, do we really have to learn these same lessons over and over and over while the risks get bigger and bigger and the losses just keep getting bigger? I'm like, I'm over it.
Well, when you have celebrities and millions of followers from YouTube, content creators pushing this stuff, trusted people in the space, in the finance space, everybody was shoving FTX down people's throats when it came to advertising it. And that was all on purpose, right? Because FTX was partnering with these content creators, partnering with these celebrities, buying stadiums, and like, hey, you can trust us, guys. And these retail investors that are new to the space, they're like, oh, well, if this YouTuber says it's okay, then I'm going to do it, right? And so I think
let's talk about that for a second, right? Like the problem of all of these influencers out there making millions and millions of dollars shilling affiliate links for not just FTX. I actually think, FTX and Coinbase and some of the like more regulated or spot exchanges, like, okay, that's fine. But let's talk about these guys and ladies that are out there pushing these high leverage, completely unregulated futures markets. Look, Trav and I and Nikki have been in the financial markets for a long time. I've seen every wave of scams come through. Let's go back to the early days, right? Late 90s, early 2000s, boiler room, right? That's where the Wolf of Wall Street came out of, was phone sales, call people, sell them shitty stocks, pump and dump on them, right? Next phase of that was email spam, penny stock pump and dumps, right? Where people would mass spam, get paid to promote shit, and people got sued for tens of millions of dollars, and a lot of people went to jail over that. Next thing, Forex trading brokers, which to me has a lot of parallels to some of these unregulated crypto futures exchanges. Just go back and look at the history of this. This was really big around like 2010-ish, where you would have all these different Forex brokers that would pop up, and they had different order books where they would trade against their customers. And it was the exact same marketing, the exact same language as a lot of these shitty crypto exchanges today. And they would be trading against their customers and then calling them up, trying to get them to refund. And if you look at some of the largest crypto influencers today, they're saying shit like, hey, if you send $250,000 to XYZ exchange, they're going to give you tens of thousands of dollars in free money to play with. How the fuck do you think they're affording that? It's not out of their goodwill. You know, so I don't know. And then, you know, we had the Binance trading robots and all. I've seen it all. And I'll just say this: the crypto scams and the outright fraud and the pump and dumps and all the stuff that we're seeing, it completely overshadows every scam I've seen prior to this by an order of magnitude. It's so much bigger than any prior thing. And when I say scams, I mean like outright ICO fraud, projects that just rug pull DeFi shit that uses the decentralized finance marketing term, but is really centralized, to crypto exchanges. Like it's so much worse than anything I've seen before. And I think that let's talk about like what could come of this, right? The pro is that, yeah, this could drive people to really understanding why Bitcoin is so pure, and being able to truly see that it's different from everything else. But on the bad side, I think it's going to take a long time for public opinion to recover from this. And I don't even think we're done with the fallout. I mean, I think we could see more implosions, more exchange exit scams. And I don't think that we're out of the gate and that FTX is the last bad thing that's going to happen. I think we're going to see more bullshit over the next several months. So buckle up.
I agree. I think one of the fundamental problems across the crypto space is the amount of leverage being used, which is kind of insane given the volatility of the underlying assets. You know, even I think a part of what happened at FTX probably just boils down to leverage. It sounds like they went away from being delta neutral. They started taking positional trades at one point. You were using leverage. Then they, you know, juiced the leverage by taking loans against assets that were super volatile, right? So but in general, I think leverage is a problem across the space. It was a problem in DeFi. It was a problem for 3AC. It was a problem for, you know, just so many entities out there. It's just crazy to me that the levels of leverage that are still being employed. So like we always say, like leverage is something that'll take you out of the game. It's something that's guaranteed to blow you up. Like we saw it in the 90s with LTCM. Like eventually, you know, you blow up if your position sizes are too big and your leverage or your leverage levels are too big. So it's just kind of another lesson in leverage and I think as far as Bitcoin is concerned, you know, you lose another fiat on ramp. So that's one impact. And I think obviously we talked about the confidence being shaken. On the other hand, you might actually have some Bitcoin tied up for a while in bankruptcy proceedings. You might have a shift of market share from shittier projects over to Bitcoin. So the net effect of that is kind of hard to figure out in the short run. It looks like maybe price stabilized for a little bit, but this could go either way in my mind. Like I think it's hard to imagine a scenario where, you know, it's super bullish for Bitcoin in the short run. But it is nice to see that it didn't totally collapse, right? I think that's also says something there.
Yeah. I mean, price did panic off a little bit, and we can talk about the charts in a second. But yeah, it has kind of stabilized around 16K as of today. And I'll talk about what I think is going to happen next. But you know what's crazy about this whole thing? The exact same or a very similar thing happened just a few years ago with QuadrigaCX, where the CEO was basically a gambler. He was an addict and started trading his customers' money to try to get exponentially more rich and fucking lost it all. And then went to India and apparently died right? There's a Netflix doc that covers this. We could speculate if he's really dead or not, but the point is like, this story is not new. Why do we have to repeat the same story over and over and over again? I'm frustrated at that.
Greed.
Anyway, I'm gonna get off my
because
soapbox.
of greed.
Greed. Yeah.
Greed is.
All
I
right.
mean, we've seen this across Enron, Bernie Madoff. I mean, we've seen all kinds of scams, and it's greed, and it's always going to be something that is there.
So our takeaways, though, we've talked about a few already, but I think it's helpful to summarize, like, for avoiding stuff like this in the future as like an individual investor. We talked about specifically to crypto, not your keys, not your coins, meaning, you know, you should be safeguarding the ownership of at least a significant portion of your crypto assets yourself, whether that's a hardware wallet or diversifying across a number of exchanges, whatever strategies you want to utilize. But basically, don't be all eggs in one basket in a centralized exchange. That's one thing specific to crypto. We mentioned leverage, you know, being prudent about even as an individual investor, not getting over leveraged, or, you know, certainly being involved in some sort of like, you know, system where you've got like implied leverage. And then also I would say, you know, basically, like, if something sounds too good to be true, it usually is, right? Like if someone is saying that, you know, you've got, and this is maybe more for the institutional investors who got involved in this, but like if it sounds like, you know, someone's being built up like to be a messiah, like, you know, maybe it's too good to be true. If they're promising returns without risk, maybe it's too good to be true. We saw that in Madoff. We've seen that in a lot of situations, a lot of Ponzi's, you know, from Theranos to FTX. We've seen a lot of
here's Alameda,
Yep.
right?
There it is.
15% annualized fixed rate loans,
no downside,
high returns with no risk. These loans have no downside. We guarantee full payment, blah, 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 blah.
Yeah. If you ever see something that sounds like that, your BS meter should be like going off like crazy, right?
Yeah.
What else? Did I miss anything else?
Man.
Leverage, not your keys, not your coin. You know,
Great
don't fall
summary.
for stuff that sounds too good to be true. What else? Well, I'm sure there's something else I missed.
I mean, I think your point about like egos and narcissism, like, dude, I can pick out a handful of guys in the crypto space that are just classic textbook, like Ponzi guys that, you know, they have the biggest egos, and those are the ones that fall the hardest.
Yeah. Yeah. It's just, you know, in most cases, I think hero worship doesn't get us anywhere, whether that's, you know, even with some of the best examples of all time, you know, Steve Jobs or Warren Buffett, you know, there's a limit to how much we should put some of these people on a pedestal. And I think, I mean, sometimes we do that. The media does that a little too much. And we often find out that the real truth behind the scenes isn't as amazing as it always looks.
Yeah. Well, hey, a little bit of a lighthearted break since, Jesus, man, I just made everybody depressed listening or watching the show. I have been obsessed with AI art the past week, and you know, like Midjourney and what is it, Dolly, stuff like that. So I give you my creation for you guys watching the video. I made a combination of Bernie Madoff and Sam Bankman-Fried.
Oh, that's amazing.
Put in some like keywords of like Bitcoin and like euphoria, and then, oh shit, prison and depression. And it's amazing what these AI art platforms can really do.
You're not going to show Chris Dunn as a superhero?
Oh, yes.
You're not going to show the people like, Chris Dunn is a superhero?
Chris Hulk and
from
Chris
my eyes
the
only,
strongest man in the world. It's crazy what you can do, dude. I'm obsessed.
It's wild that you bring this up, because we haven't even talked about this, but I've kind of gone into a little bit of a rabbit hole over the past couple of weeks on the generative AI stuff and what's happening in that space. And I know a lot of people are already hyping this up on Twitter, but like, holy moly, like this is game changing. Like what's happening in AI right now around generative AI and transformer models and things like that is just mind blowing. Like there's a ton of business applications, like real world applications that are actually now spinning out into companies. I think what our buddy Sam did a whole podcast episode on the MFM podcast about My First Million podcast about like some of these companies that are doing like cool stuff in the generative AI space. And it's absolutely mind blowing what's how fast that space is iterating right now and what's being done as far as like real world applications being built.
What are some of the real world applications that you're seeing?
So the Levels IO guy, who I think also started Nomad List, he actually built something in like 3 weeks, which was really cool, which is basically an interior design generator where, you know, you give it a picture of like your house and then you tell it like a style like that you want it to look like, and it'll spit out essentially images of like ideas for what your space could be transformed into from a design perspective. And then some of that could even be linked to actual like purchases of products and things like that, which is really cool. You've got some stuff that's been around for a little while now, but it just keeps getting better, is like the marketing copy or the just copy generators like Copy AI and Jasper are, I think, the two big ones in the space right now.
Yeah, I went down the Jasper rabbit hole too.
Mm-hmm.
That's pretty amazing stuff.
I was writing myself some notes on this the other day. I'm trying to find out. I don't know where my note went, but yeah, I mean, that MFM podcast episode was a good one because it kind of spelled out some ideas. One that I was thinking about was like this idea that, you know, people very much similar to the movie Her. Now it is actually becoming possible to have AIs that you can talk to that have, you know, a voice or even a face that can become like your personal psychiatrist or, you know, a personal friend. Ooh. Or maybe, and this sounds crazy, but maybe even at some point you'll be trying to talk to your dead relatives through like, essentially AI models, which is pretty.
There was a movie about this where like a guy fell in love with his operating system.
Her.
Yeah, that's Her. Yeah, that's
Her.
Yeah, Her. With,
is that? Okay, yeah.
Joaquin Phoenix, I think.
Man, right? That is some creepy shit.
Yeah.
So it's so funny that you brought this up.
Part of AI is really exciting, and the other side is just like absolutely terrifying.
Yeah, it's going to get wild. I mean, obviously we talked about the deep fake stuff that just continues to get better and better. You know, they'll probably, I think I heard something about, you know, porn's always early to stuff like this, like deep fake porn now. Like apparently people are putting like, you know, I shouldn't even mention it. It's too weird, but like, there's like,
no, man, this is like cutting edge stuff.
You know, weirdos who want to have sex with someone or want to watch porn with like an Elon Musk face on a body or something. I don't know.
Jesus.
Listen, I don't know. It's not something I'd be interested in personally.
Yeah, you're more of a Bezos guy than a Musk guy, right?
Yeah, I would say so for sure. Yeah.
Oh man. Yeah. Okay. So I guess the theme there is like AI is definitely an interesting space. I'm obsessed with the art side and the copywriting side, like you were saying. And yeah, I mean, real world use cases. If we could get some of these guys doing the crypto scams where there are no users over into spaces that actually do something for the world, that would actually be a net positive.
Actually, this leads me to a quick question that I have for Travis. So I've been thinking a lot about how, you know, the .com bubble compares to what we've experienced recently in tech stocks and the multiple compression we've seen in such a fast amount of time. But it took a long time for a lot of these tech companies to recover from the .com bubble. And I was thinking about where we are now with different tech companies. Do you think that since technology is kind of progressing at such a rapid pace, that maybe tech stocks can recover a lot quicker than they did at, you know, after the .com bubble? Like technology essentially is on our side in terms of a lot of these companies continuing to innovate at faster paces, continue to generate revenue at faster paces, increase margins, you know, things like that. Like, do you see that as a potential possibility to shorten the recovery?
That's a great question. I hadn't thought about it from that angle, but it certainly seems possible. I've been of the belief that the cycles happen faster nowadays, in part because of the speed at which information travels and people and companies can adjust. You know, I mean, if you think about like 2000, 2001 and how early it was still in the development of the internet, we didn't even have smartphones. And so now today, the speed and the sophistication of investors and companies is much greater. So it seems to me like our cycles have been faster. Even Fed policy responds faster. We saw that during COVID. So I think we could see faster cycles, you know, and as far as the AI impacts, that'll be interesting because I do think, you know, there's this whole idea of like the exponential nature of technology development and the whole singularity. I'm not sure I believe in like the extreme version of that, like the singularity part of it. But I do think that could accelerate both the rise and the demise of certain companies. You know, I heard the other day, an argument that, companies like Upwork and Fiverr might get totally replaced by generative AI models. And I had to think about that really hard because I actually own some of both of those companies. And I was like, wait a second. Yeah. Like a lot of these people that actually do these $5, $10 renderings for people of like logos and things like that, is that going to just get immediately replaced within like 12 months by generative AI models?
That
And
makes sense.
I was like, yeah, that might actually be possible. But on the other hand, maybe it's an opportunity. Like, what if, Fiverr starts creating that on their own marketplace and they start, creating automated models that do that, and they don't have to, they don't even have to intermediate anymore. They become like a direct provider, and their margins could be super high on something like that. So it might be an opportunity. It might be a threat. And I think it's going to depend on like what companies embrace it and how they do it. Unfortunately, it looks like, a lot of the big tech companies are so bloated right now and dealing with their own like organizational issues that they're going to probably be a little bit slow in doing some of this. But
you don't think they'll just acquire companies already doing it well?
It's
like
probably
Jasper?
Yeah, I think that's likely. The question is at what prices. And like you look at the Adobe acquisition of Figma. Now, Figma is not necessarily like an AI player, but Figma was taking market share so rapidly from Adobe that Adobe had to pay an insane multiple to acquire Figma to fend off its core business. So yeah, I mean, it's not necessarily good for shareholders if these become massive acquisitions for some of these companies. So it'll be interesting to watch. Yeah. I think you kind of nailed it in the sense that like, I think these things can definitely happen faster, but for some companies, it's not going to be a good thing. For some companies, I think it'll be a disruptor.
Right.
Yeah, because the rate of change and the rate of innovation is starting to speed up, right? And like, if we were looking at like kind of a hockey stick, I think AI could be that thing that maybe in the next like 3 to 5 years, we look back and it's just like, holy shit, like how far have we really come? Cool. Let's take a look at some charts, talk about markets. I've also got some on-chain data that I want to talk about with Bitcoin. I know a lot of people are probably looking at this going, hey, Chris, what the hell? Bitcoin is down from 69K to 16K. We've got all this fear in the market. We've got, market sentiment at peak fear with, just on-chain data down in the dumps, price charts looking nasty. While stock market has bounced a little bit, what does that mean? Let's just start. I want to pull up some on-chain data. And, on the idea of exchanges, you can see that exchange balances are at their lowest levels since 2018, basically the start of 2018. And this is no surprise, right? Like, I think this is going to accelerate. If we kind of zoom in here, you can see that the amount of Bitcoin sitting on exchanges is getting sucked off. And I was thinking about like, what does this mean? If the supply gets pulled off of exchanges and everybody that's panicked has panicked, right? Like we saw back in 2013 when price went from about 1,000 down into the 100s again. It was basically once the market washes out all the panic sellers that want to sell, that's where the market bottoms, right? Now the caveat, and I think the difference here that we have to think about is like the potential contagion effect that FTX could have on the crypto markets, and the ripple effect and the run on other exchanges, and the lack of confidence, because you need the demand side too, right? You need people to actually buy for prices to go back up. But what does it mean if you suck off a ton of the liquidity on exchanges and a lot of people that panic sold are already out? I don't think it would take much to get a really aggressive V bottom bounce. What do you guys think of that? Any opinion on, how the order book could look and potential impacts on price?
Yeah, I think that's a pretty astute analysis. I think, yeah, like you said, like sometimes liquidity drying up doesn't always mean that the price is headed straight down, and it can actually create like pretty vicious moves in the upward direction too. And, I think also like if you've got, I think we kind of alluded to it earlier, but you actually might have people going back to Bitcoin as kind of their primary foray into crypto, or into as their primary holding within crypto. And so that should, I think, benefit it, at least on a medium, maybe longer term time frame. Short run, it seems like, yeah, the money keeps coming off exchanges, like probably not a net positive in the short run. But like you said, I think that can create a situation where you do actually have, a pretty good holder set, and you kind of shake out the fear-based holders and the hot money, so to speak. and you have a more stable, longer term holding, and people are not going to be, looking to sell those holdings at low prices.
Yeah, great point. And this is kind of like, there's a bunch of different charts that are constantly floating around. And I like to look at all of like the bull case and the bear case ones. This was an interesting one for you guys watching the video or listening on the podcast. What we're looking at is a log chart of Bitcoin's kind of exponential gain since, 2010 or 2011, and how every time a bull market implodes, the pullbacks have gotten a little bit less, right? So the first one back in 2011 was like a 95% pullback. Then in 2013 to 2015, it was like 86%. And then the 2017 to 2019, it was like 84%. And then right now we're about 77-ish% off of all-time highs. And each time there's a different narrative, right? So back in 2013, it was Mt. Gox. 2014 and 15, holy shit, it was just endless bad things that were happening. 2016, Bitfinex got hacked in the summer. And every year there's a narrative of like why Bitcoin's going to die, why this is the end of crypto, why this is the end of the world. And while I do think that FTX is the worst thing to happen, the single worst event so far, FTX is not Bitcoin. Right. And I just want to drive that point home because I know I've been pushing a lot of negativity on this because I'm so fucking pissed that this happened, but it doesn't affect Bitcoin, right? This is not Bitcoin. Bitcoin is good. It's continuing to do what it's done. Bad actors, centralized stuff, right? That's not Bitcoin. And I just want to drive that point home. So when we think about the potential bull case, let's look at some on-chain data, right? And look at when things are in peak fear on market sentiment, what does the on-chain data say, right? So we already talked about the fact that Bitcoins are getting sucked off of exchanges and put on hardware wall. That's where they belong. You even had Jesse Powell, the former CEO of Kraken, step in, and I think he was even saying, get your exchanges or get your coins off of exchanges. So when you have exchange leaders that are saying that, listen, right now on the net realized profit and loss metric, we are at extreme panic levels, extreme capitulation fear levels. On the MVRZ, always mess this up, MVRV Z score, this shows peak capitulation and peak euphoria. We're down in the depths in the green zone. And also in the percent supply and profit, we're down in extreme lows. And also on the R HODL ratio, we're in extreme lows. So a lot of the market timing indicators are at extreme oversold levels, and market sentiment is at extreme fear. And the technicals are obviously really, really bearish. So the question is this the low? I don't know. I don't have strong conviction as of right now that 16K is the low. The big unknown is the potential contagion here, right? Are there going to be more implosions in the next several weeks or months? And if so, I think that is going to put bearish pressure on the market. But here's what I'm looking for. I'm looking for price action to be a guide, right? So right now we had a break below 18K and we're kind of holding up. We're kind of in no man's land. So what I think would actually be a bullish sign is if we got a V bottom off of this and we got back to 21K, and then we held a higher low, right? So basically we could put in a larger like inverse head and shoulders pattern here. That's one way that I think the trend reverses if 16K does hold up. That's what I would look for, is a break above 21K. Or the downside bear case here is that we get a second wave down, right? So we had this first leg from 21K to 16K. If 18K now holds as resistance and we get another washout, that's actually what I would prefer, is a much deeper, kind of more aggressive sell-off where we get like a 30-35% sell-off in the span of a couple of days. That's where I would really be aggressively dip buying. I didn't dip buy this pivot here. I just, again, have been watching kind of the fallout to see what the contagion effect is in the Bitcoin markets. So yeah, that's really it. I'm just waiting for either a bigger washout or an inverse head and shoulders to see when it's time to really start hammering that. What do you guys think of that thesis? Do you guys see anything else or any blind spots or?
I think that, yeah, I mean, your technical analysis there was right on point. At this point, it is bearish that we've broken that support line because it was holding for so strongly for so long, even as the S&P 500 and the NASDAQ were selling off and showing weakness. So that's obviously a bearish sign from a technical perspective. But the big question is it a fake out breakdown? And, will it trap shorts essentially or not?
Yeah.
So that 18K level that you mentioned that was prior support will now turn into resistance. That's the key level that we should be watching. So yeah.
Yep. And, I'll just say this, like, look, historically, we know the best times to buy Bitcoin are when it's 70, 80, 90% off all-time highs. And when the on-chain fundamental factors are flashing oversold, and when we are at peak fear and peak capitulation, which we kind of have all of those, right? I mean, price is only 75 to 80% off all-time highs now. Could we go lower? Yeah. It's damn near impossible to pick the exact low, but I was there in 2013. I was there in 2015. I was there in 2019. I was there in 2020. And this feels very similar to all of those situations, right? The only kind of difference here is the potential contagion effect. But again, there's always a story. There's always a reason why price could go lower. I'm not calling for a low here, but I would be surprised if we weren't close.
One thing that may be affecting it, by the way, is that, the correlation that Bitcoin was kind of loosely holding to with the NASDAQs this year basically broke after the FTX event. And, there could be, I mean, you could make the argument that Bitcoin's actually being a little bit supported here by the rally in the NASDAQ over the past week and a half. And if you lose support in the NASDAQ again and on the stock side, that could be another catalyst potentially for Bitcoin to kind of make that capitulation low that you're looking for.
For sure, agree.
Yeah, so the NASDAQ is at the 100-period moving average right now at 12K resistance. So this is kind of a do or die area. If it rolls over, and like Travis was saying, if it rolls over and makes a new low and Bitcoin doesn't show relative strength with that, that would absolutely cause like a second leg down to that 10 to 12K zone.
Speaking of, this could be a good pivot into the stock market and the rally that we're seeing right now. Are we seeing a bear market rally, or are we seeing a shift in momentum and the bull market or the bear market ending? That's like the big question right now.
Yep. So what do you think? So the big narrative in equities, or I guess just the macro economy, has been inflation, which has started to roll over, right? What are we at? 7.75. We've been talking the past few months a lot about inflation and the Fed and rates. What are you guys' thoughts on that? Anything changing? Do you think this is the high, or is it just a dip that's going to get bought up and we're going to have higher inflation?
So we've talked about how we think that inflation will remain a little bit elusive to bring down to the levels that the Fed wants it to bring down to. So it'll remain quite sticky, we think, at least the 4 to 5% range. But I think it's inevitable that it is going to come down and will continue to decelerate from where we're at, kind of late fall. If you look also, like when we got that first big, we got a decline. It was sort of like a fake out in July. And so I think there was like that crazy number of 9.1% year-over-year CPI in June. And then in July, it pulled all the way back to 8.5, all the way back, right? But it was a pretty big month-over-month deceleration. And the market went on to rally. And I think the S&P like literally went up 10 to 15%, tagged the 200-day, and then, essentially sold off after that for a couple months until just recently. So what we could be seeing is something similar to that, where, the market's been eagerly anticipating a further deceleration. And we did get that deceleration last week in the CPI as it moved from 8.2 to 7.7. And that was below expectations. And the market rallied massively. We're up like 10% in just a couple of weeks on the S&P and even more on the NASDAQ. And so, I kind of think what we saw in the July, early August timeframe might be happening again currently, which is, the rate of change in inflation is improving and that's letting the market rally. But I'm not so sure that the fundamental picture exists for stocks to rally much beyond like the 200-day or something like that, because we've talked about, there's a lot of forward-looking signals that are actually negative outside of inflation. Corporate earnings are starting to roll over, so earnings estimates are being brought down for 2023. We have corporate margin pressure in a lot of different areas. We have accelerating layoff announcements in tech, which could start to show up in unemployment increases here in the next couple months. And so those are the kind of things that have me a little bit worried overall about buying stocks aggressively here. And I'd probably be looking to reload extra short exposure if we do get up to that 200-day on the S&P or above potentially. But, this is a pretty tradable rally. There's a lot of things that are positive that weren't as positive, just a couple of weeks ago. So
interesting points. Nick, any opinions?
Yeah, I'm with Trav. I think fundamentally it's kind of hard to justify us continuing this rally for much longer past the 200-day moving average. If we get above the 200-day moving average, that'll really be something, and it'll be, I think, it'll catch everyone off guard. I don't think people are positioned for that. I think people are mostly positioned short and for more downside and the risk. So I guess learning from 2020 and other periods in history, I guess you can't put it past the market to do some type of craziness and push back through the 200-day moving average and go into a bull market. I guess you can't put it past the market for that to possibly happen with how bearish everyone's position. But if we're looking at fundamentals and looking at earnings, and I keep going back to this choppy market environment, this thesis that we are just going to see a lot of chop. We're going to see a lot of ups and downs through these levels here. Maybe we don't make new all-time lows or new year-to-date lows. Maybe we kind of just bounce around between the low we've put in and this 4,000 level or the 200-day moving average for a while until there's a bit more clarity. What we've had now with inflation starting to roll over, and I guess the Fed sounding like they'd be more willing to slow the pace of rate increases, although they're still increasing rates. I guess with all of that information, it's given us enough to say, hey, maybe we could just hang around here and hold up. And we're seeing a rally because, I mean, if things have just been so dire and depressing for a while in the market, right? And so people are getting excited, especially tech investors that have been beaten to a pulp. So I think that,
Nikki, you've been talking a lot about the tug of war of the recession, right? Of a potential recession. And like a lot of people don't know, like, hey, are we actually in a recession? What's positive, what's negative? I've heard a lot of confusion, and I know you've gotten a lot of questions from people like, what does this even mean? And where are we? Are we in a 2008? Are we in a Great Depression? What is this? Is this like, the dot-com bubble of the early 2000s? Maybe talk a little bit about like what the tug of war is, what's positive, what's negative, and maybe what the possible outcomes are.
Yeah, this has been kind of my theory for a while of the choppy market that we may see over the next year or so, is because there's good and there's bad, right? Like Bank of America came out and showed us that balance sheets are a little more bolstered than they were pre-pandemic, which who knows how long that'll last, but it's there. We've got an unemployment rate that is still low, which obviously that could change with all these tech layoffs, but there's still a lot of jobs out there. So job openings are plentiful. And then on the flip side, we have inflation, which is really starting to eat into the consumer's disposable income. We know that consumers are trading down in terms of quality of products, right? They're doing more generic products. They're not spending as much money on things like clothing and shoes and things like that. So there are a lot of pulling forces out there right now. And are we in a recession? People can argue this all they want, but I don't know if the depth of because basically how it works is economic research goes back in time and they look and they say, okay, what was the depth? How widespread was this economic slowdown? What was the length of the economic slowdown? They're looking at all these things. And if you look at the unemployment data right now, it's really hard to argue that we're in a recession. I do think that the chances of a mild recession are very high. I think that we could definitely see that going into 2023 as all of this crap that's been going on starts to hit the market, right? It starts to, layoffs start to hit, and the Fed's interest rate hikes start to hit more and more and more. So I think that where we're at right now is mild recession is still very possible. I don't think we're in a 2008 type of situation. We're definitely not anywhere close to a depression, even though headlines may try to tell you that, or certain people fear mongering may try to tell you that. We're just not in that scenario. And I think this is more of like a lukewarm economic environment, but inflation and the energy crisis is really, those are like the two big wild cards that are going to dictate what happens, I think, going forward. Because if oil prices go back up, I think that we could be in trouble again.
Good point. Yeah, let's take a look at where oil and stuff has been. It's been kind of flat over the past couple of months. And gas specifically has come off about 45% off of all-time highs, which is, I think, a good sign for the economy. Trav, anything else to add on that?
No, I mean, I think Nikki said some really great things there that kind of frame how I'm thinking as well. I'd probably put my probabilities at like 30% probability of a soft landing, and we just kind of come out of it and the economy recovers and we go on to grow. About a 70% chance that we get into a bit of a mild recession, mild to moderate. I don't think, like Nikki said, we're in the type of position where we're going to get like a massive, deep 2008 style crisis, just because, we don't have the same issues with balance sheets with regard to the banks. There's things like the consumer balance sheet being set up a lot better going into the crisis as well. So yeah, I think, there's some things that would suggest to me that we're not going to get the worst tail of the outcome. But yeah, I mean, I think I would put more probability on the outcome that we're going to, the Fed is going to just keep at it until we get to a point at which unemployment does rise, and then that creates that vicious cycle of businesses cutting back spending, and then more layoffs, and then we've got the point at which I think the Fed stops, and then we have to go through probably more chop, and then eventually things start to look rosy again. But yeah, that would be my kind of probability assessment currently.
Good stuff. Well, we've covered quite a bit. Just to recap, keep all of your coins on one exchange. Don't turn on two-factor authentication.
He's joking.
Oh, man. I just got to make light of it at this point. It's like people don't get the message by now. I don't know. I'm just going to encourage people, make the smart moves in crypto. Think aggressively, or at least aggressively protective over your private keys. And we'll see what happens. I mean, the market environment is extremely, extremely fearful and bearish, which gets me excited, actually. So my question, though, the thing that I've been thinking quite a bit about is, are we going to have another crypto summer, right? Crypto summer, not just Bitcoin, but are we going to have another wave? And my prediction is that we are not going to have, look, I assume that I'm wrong with this because my thought was, after 2017, after all the scams that came out of the ICO bubble, I was like, okay, altcoins are mostly dead. The things that launch in the future are certainly going to be legit. And then we got the Ponzi-nomics of DeFi. We got the NFT JPEGs. So I assume that I'm wrong with what I'm about to say, but I'm going to say it anyway. So I think that we are going to have another crypto summer, but it's going to look way different. It's going to be way less projects, way less bullshit. And the things that do rise out of this are actually going to have utility, because people got burned on such a massive scale that I hope that people are going to just start being smarter, I guess. But again, I can't predict the madness of the crowds, and there will probably be something that comes along that is just complete bullshit and fluff that does moon. So I don't know. That's why we trade, right? I don't try to base my moves on predictions, right? I have ideas, but at the end of the day, I trade the chart, right? I don't inject my own bias into it. I just say, okay, these things are moving. These charts are hot. This is how I can trade in and out of it. And my goal is to trade alts to accumulate more Bitcoin and more fiat that I can pull out of the ecosystem and diversify into equities, real estate, venture stuff, right? And I would just encourage you guys to assume that 99% of crypto projects are going to fail over time and invest accordingly. So that's my soapbox for the day. I'm going to shut up. What other things do you guys want to cover?
I think we covered good ground. We'll have to save the Twitter, Elon, Tesla drama for next week, and maybe take some good questions next week.
There we go.
Maybe some more
next
stuff.
week we'll do more Q&A and be a little more lighthearted.
Yeah, totally.
Okay, awesome. All right, well, guys, thanks for joining us. Go to wetalkmoney.com, submit a question for the show. Also, if you want to check out our wealth building community, it's wetalkmoney.com/community. You know, trading and investing can be a really lonely game. And if you're sitting there frustrated because you're limited by your own perspectives, I think it makes sense to get around a group of people that have similar goals. And I know trading groups get a bad rep because of pump and dumps and fake gurus and stuff like that. But if you're looking to get around a group of people that are focused on the long game, then check out our community. You know, we have a really good time over there, and we don't overtrade. We don't pump bullshit. I don't get paid to launch ICOs or to promote anything like that. It's a very objective group. So yeah, check us out. And with that said, we will see you guys next week on a much more lighthearted show with a bunch more Q&A.
Yes.
You're here.
Lighthearted. Thanks, everybody.
All right, guys. Take care. We'll see you next time.